Hello, ladies and gentlemen, and welcome to our interview with David Rogers. David is a global product marketing manager covering risk management solutions and technology delivered to financial services, energy, and utilities verticals for SAS. And SAS is the leading global analytics company with 40 years of experience spread across all key sectors such as health, government, utilities, and financial services. David, thank you for taking your time and coming to our virtual interview today.
Thank you, Boris.
Because SAS is such a huge company, we won't be able to address the whole spectrum of what you do, but we rather concentrate on the risk modeling and the decisioning, as well as the model governance in our digital future, and especially the impact of COVID-19 as a driver to the new operating reality. So David, could you please, you have been many years with SAS. Could you explain perhaps what is your main focus right now?
Yes, Boris. Thank you for that introduction. Yeah, within the context of risk management and SAS's role in that space, we're looking at this as part of a global initiative. SAS has a dedicated line of business function to cover risk, and we've been in this market for a long time, and we've also developed the overall knowledge that any business that's going to drive its risk management function is going to be based on the data that it can acquire, and then the function of building models and analytics that will eventually become the decisioning, whether it's based on the business requirement or regulatory requirement. So this sort of evolution in risk has been a kind of ongoing aspect, whether you're talking about in the context of credit, market, operational risk, GRC. These are obviously key areas that SAS has particular involvement in. I would say that obviously clear to everybody on the call, regulation has been a key driver to the way we've been responding to the requirements for firms in risk management. But I also say just in the overall context of risk, yeah, as a topic, we look at it as a specific area that we can develop new ideas from. So it isn't just driven by the regulatory bodies' specific statements. We see the opportunity to develop it as a distinct function and also deliver on sort of key areas of development. So just a sort of illustration of what I'm kind of pointing to in that sort of context. If we're talking about it in banking, obviously the Basel regulation has been a key driver, sort of RWA calculations. More recently, the regulation around IFRS 9 and CECL. And ultimately, keeping that in the context, these are driving developments. So these aren't just specifically just driving to the final report. There are underpinnings to make these kind of processes function. And SAS sees this in its entirety. So we're not just seeing it just in individual projects. And just to sort of round off that comment, we also see this, as you kind of introduced us to, in terms of insurance, energy, utilities. So while financial services is a key core part of our business, we can see that risk modeling and the way that it's being developed has an application across all of the businesses at the same time.
All right. So we are currently in the midst of the major crisis, the most disruptive period to our society in peacetime history. And the impact on the public and our healthcare system has been devastating. And our economy is facing the prospect of recession much deeper than the financial crisis of 10 years ago. And the disruption has called into question the effectiveness of currently deployed models and need to assess and take action to deal with the impact on the business, especially around credit risk and credit risk models and financial services. David, what are the main challenges for your clients that you see right now, and how is SAS helping your clients to deal with the new coronavirus reality?
Yes, I mean, as I mentioned, SAS is involved in banks globally, and obviously the response to COVID is a mixture of different aspects. So you've got the government impact, the government responses to what is happening to their financial markets, what's happening to their populations. We have the individual banks, both local and global, essentially looking at how their underlying models there and underlying systems that they're using to help make their decisions, whether it's based on originations, collections, how they're functioning. So there's a very basic need directly now to appraise where they are. SAS is assisting both in terms of offering support and to help them understand what they can change, what their calibration options are. Also help in terms of supporting, offering facilities that allow them to come out of their, say, day-to-day operation and be able to take data into a form that they can look at their portfolios, make a clean understanding of what their positionings are, what the portfolio positionings are, and then give that information back into the business to build out a more informed response. We realize this is a situation which is changing almost daily. So wherever we see today, we are looking to be responsive to give our clients the ability to build out that understanding of their models. At the same time, I think also what's key is that is the planning that will go alongside this to take the whole environment forward. So, so within the SAS world, while we'll talk about it in terms of the underlying modeling technology, I think one of the key areas of development that's occurred certainly over the last 4 or 5 years, and to some extent has been a regulatory response, is to have that model inventory in place so you can make material decisions. So you can make a view of where you should focus your energies, because obviously that's going to be key to being able to deal with the initial response. So which models are no longer functioning? Which ones are you going to have to build replacement scorecards for? What sort of rules, decisioning policy changes are you going to have to put in place? These are all immediate decisions now. They can't wait for anything that's going to, from an infrastructure point of view, quotes, make things better. However, over the time period, coming weeks, coming months, there will be a shift away from the immediate crisis and then a need to better understand how to model the business, how to model decisions, both from as you say, from a credit point of view. You're going to have to deal with defaults and collections processes. The data that was driving your models originally, certainly in the short term, is not going to be there and it's not going to be consistent, not going to be able to be functioning as far as the data, the models that were in place, that they were dependent upon it. Secondly, the alternatives will be to look at data sets that previously you might be considering as a future source to model from. That's something now and present to consider what data sets will be used, what sort of alternative data are you going to be able to utilize, not only just to calibrate, but to understand what your business decisions can be based on. So I think there's a whole series of events, phased events going forward. Certainly the customers are keen to have SAS provide intelligence, understanding, advice, how to respond in the immediate crisis, but also respond over time. So understand better how to organize the underlying models and business rules, how to understand the planning. So I guess an interesting sort of additional point is that over the last 5 or 6 years, stress testing has been a particular area of interest, but not necessarily while it's been center stage for regulatory bodies, maybe it's been much more of a planning / once a year activity still for many banks. Clearly, scenario analysis and stress testing now has a much more immediate need, so that banks and any organization can to look forward in terms of what investments, what kind of scenarios they will need to take into consideration, and especially as macroeconomic data is changing. So you need that flexibility to look again. So what was true today may not be true in a week's time. So I think there is an awful lot of moving parts. A lot of what we're helping with is to try and help to concentrate and give information to clients and knowledge to be able to make better decisions going forward.
All right. So a decade or even less ago, there were only big companies like SAS, IBM, and maybe a couple of others serving the market. While in the last couple of years, we have seen hundreds of new fintech, regtech companies trying to win the market. What companies will emerge in a better shape from this crisis, and what opportunities exist for both new regtech, fintech companies and for the incumbent in the current environment?
Yeah, I mean, I think there are a number of different factors at play for the fintech community. Certainly, those who are already part or established parts of an existing banking infrastructure, so a larger bank is utilizing them in some contexts, should be well placed to ride out the initial financial storm. I mean, some will be get swept away just by the fact that the funding is longer present to support them. But the opportunity is there, obviously, in the context of what I mentioned earlier in terms of alternative data. Those who have come along on our digital platform and has established this platform, and I think the key in this area is having the experience. I think a lot of times these statements are made about digitization, about the automation and deployment, doesn't really fully encompass what the issues are. I mean, issues are as much people-based as they are technology-based. So you have to understand how these technology are going to be applied. In the case of those who are already established, those who have got in place their digital platforms and have the ability to pull alternative data, I think they have a significant head start in terms of, certainly in terms of adapting to the new situation, in terms of understanding what their alternatives can be, and then planning that in terms of, not just in terms of the underlying models, but just having that alternative way of pulling information in and utilizing it. And this speed of response, I think, is going to be key. So that timeline I mentioned earlier, there's a period of time when organizations typically were willing and able to take anything between, let's say, 3 to 12 months to effectively reorganize their business models and the process for product development and then ultimate deployment. That timeline is no longer there. So new incumbents, fintechs, obviously have come into the market with the ability to reduce that time. They still need the knowledge and the experience to run alongside that. So I think you've got to have a much more complete understanding to get the best out of this situation. So it isn't just technology based. It isn't just organization and length of service based. It's bringing the two parts together. And I think that will be the companies that have that in place will survive and come out and be successful. So that's kind of I mean, it's a very positive view, but I mean, certainly we'll see over the next 2 or 3 months who comes out initially as having not just survived, but has prospered. Because I think there is this element that, I mean, while we're dealing with this genuine situation, people are prospering. Organizations will see where they can take the opportunity, and they will use their models and their scenario analysis to understand where to invest and where to put their capital for development.
All right. What are the major trends in the risk modeling and decisioning space, and what we should expect from you guys in the future?
So this is an area in the world of risk where SAS has been active, well, since SAS was launched in 1976. So it's an area of development where most recently, with the introduction of new methodologies like AI machine learning, the introduction of the cloud, there are those kind of technology enablers are now opening up the potential for the analytical environments that SAS is providing as part of the modeling environment. What that means in practice is this is opening up analytics to a much wider group of organizations. So and it is also, I would say, it's the frequency and the time to deployment for any number of organizations that in the past, this might have been a preserve of the tier one. it may have been something an organization would only go to for a third party, a consulting firm, and not see as part of their an integral part of their business. And also think about it in the context of IP. So a lot of times the IP that is driving the business is integral to the models. So increasingly, the opportunity to have much more control over your models and the deployment of them is going to be key to the success of your business. So where SAS is now moving its capability, both in terms of the risk modeling piece and how it then functions as part of the decisioning, is, I think, becoming much more available to sort of more medium, smaller organizations. I mean, the need is to have that flexibility in your decisioning. So the segmentation, your approach to the market, the type of markets you're going. So some markets don't lend themselves necessarily to the type of automation that's being sort of well deployed in terms of consumer. But they will be increasingly so, I mean, especially once more of the data sets, so more of the alternative data sources become more readily available, and the flexibility that people need from their models is started to come through again. That will make a big difference to the way that you use models in the future. So it's a combination of having access into the technology, understanding how to use it. So we mentioned earlier about education, about enablement, and then also then the time to deployment. So the time to take your idea, develop the model, and then put it into the operational environment that actually is making the decisions or helping you make the decisions in your business. So this is becoming much more, I think, available to smaller organizations.
All right, fantastic. And where do you see the position of risk management as a function during this time, and also in the medium to longer term, as they deal with pandemic impact and the business regulatory landscapes that emerged across the globe?
So I think, I mean, it's interesting. I think people have obviously very much clearly driven by the regulators. The investment in regulation and compliance has been a key part of where banks have had to, and any firms have had to invest. Whether that's truly risk management is an interesting conversation, especially if you're a quant or you're one of the modelers. You often can see the opportunity, but you tend to be limited as to what that opportunity can be to offer. I think, as I said earlier, I think with the kind of introduction of cloud-based analytics and the introduction of these newer models, especially around machine learning, although it's not the most exciting part of the equation, what drives or what maybe is the block to many opportunities to use analytics is the data. And machine learning is giving us the opportunity to better analyzing the underlying data, whether it's cleaning it, analyzing it, supporting it in terms of delivering the standard models that are getting deployed. So I think like any development, like any kind of technological advance, certain aspects that have to come together to be able to fully embrace it and fully exploit it. And I think these elements in the cloud, these elements of new techniques and analytics, and also, as I sort of mentioned before, the education of people who are going to drive that. I mean, again, if you don't have the people who understand it and then be able to deploy it, then you're not going to get the full benefit of it. So I think that is going to be a key driver. How people invest in the development of those individuals are going to be key to getting the success that we're talking about.
All right, thank you for your insights. And the last question, how we at Global Risk Community can contribute to the process of a better understanding of this complex world of risk from your point of view?
I think the key is actually engagement. Is sort of, as mentioned before, education, engagement, peer conversation. The more people talk on a topic, the more it's understood. The more it's challenged, the more it drives forward. So I think certainly in my career, some of the best times is when I meet other risk practitioners, people who are thinking about the future, thinking about how to take what we do today and produce better results, produce interesting results, and then offer that to our risk community and explain that as a process. And then with the kind of community that you're presenting, that's also key. I mean, if people have multiple platforms to talk on, but within the specialization of risk, it's important that information comes together and then gets disseminated and talked about. So I know there are many channels under which that takes place, but risk is to some extent only now becoming more formalized. Perhaps when you compare it to finance, for example, there's still many aspects of risk which is probably thought of as more of an art than a science.
Mhm.
But I think that's the beauty of risk management. I think what attracts it to people who come into it, and perhaps, as you kind of mentioned before, about the impact of risk regulation and compliance, is I think we'd gone through that long period where regulation had been clearly center stage. To some extent, we were starting to come out of it before the COVID crisis, where people had started thinking more about, I've got all this data, I've got these capabilities, new machine learning models, AI models, I've got this opportunity to do something different. I can use it, be more clever at how I segment, be more clever at how I plan my balance sheet. To a degree that, to some extent, you might argue that COVID should accelerate that,
Mm.
because this is not about regulation. This is all about understanding, building a better forward-looking view, predictive analytics if you want, but a forward-looking view. The short term is the here and now. We have to solve the problem today, but the future is based on the idea that you should innovate and you should look and use data in a way that's more creative within the bounds that are allowed by GDPR and all other regulations.
All right.
But I think it is an opportunity. It's in a sense, maybe risk management. COVID's given risk management the opportunity to show what it can do.
Okay, thank you. It was fantastic, and I wish you, David. I wish you great success in with your future plans, and I'm sure that our audience will be glad to review this interview. And thank you for visiting us today.
Okay, thank you, Boris. Have a good day.
Thank you. Let me see.